Welcome back to Cryptocurrency Trading Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at bullish and bearish engulfing candlesticks. Now, there are some nuances you need to kind of keep in your mind when it comes to crypto, which I will explain. So, this is what an engulfing candlestick looks like. The wicks aren't so important, but I'll draw wicks just to kind of give you that, like what it could look like. Okay, so an engulfing candlestick is just simply a candlestick that engulfs the previous one. The real body swallows the entire candlestick. This goes back to stock trading, especially on daily charts, because, the market will close this day and it might gap higher or lower and then completely reverse. In a situation where the market has been rising over time, you may have, in this case, let's just say it's a day, because we're talking gaps. You may have a very quiet day, and this might actually be a green candle. It gaps higher, tries to rally, and then it breaks down. Well, what does that tell you? It tells you everybody in this candlestick is losing money. Momentum shifted, perhaps. The problem, of course, with crypto is that we don't see the market stop. It should also be said that this could also be a downtrend, right? And we could have a quiet day and a downtrend. It gaps lower, looking like it's going to continue that selling pressure and shoots higher. Well, that is a bullish engulfing. So it's bearish when it's turning around to the downside. It's bullish when it's turning to the upside. Now, again, crypto doesn't stop. So we have to use a little bit of artistic license with engulfing candlesticks. Because the market never really stops, you won't have the gap most of the time. I mean, you can't have a small gap, I guess, but nothing of substance. But let me ask you this. I believe, and I think it's a fair assumption to say that this candlestick right here says the same thing. It's swallowing the previous candlestick. So in a market that doesn't close, you kind of have to look at it through that prism. Go ahead and remove drawings here. You could make an argument for this one being an engulfing candlestick. It's kind of one of those things where you know it when you see it. This is a bullish engulfing candlestick of the previous one. Is it a massive one? No, but it's also right here at support. Something worth paying attention to. This is an engulfing candlestick. It engulfs the previous body. That's also what is known as a hammer. We'll get to that later. This is a very bearish engulfing candlestick. So essentially what you're looking for when you have to fudge it in a market that never closes, you're kind of looking for something that maybe wipes out the previous couple candlesticks. So even though this doesn't wipe out this candlestick, this wipes out those candlesticks. This wipes out several candlesticks here on Ethereum. You can see it's definitely changing the attitude, and we went right up to resistance. This is most certainly a bearish engulfing candlestick. That being said, didn't get a whole lot of momentum under it. So one thing that you need to keep in mind is that when you get an engulfing candlestick, you are trading on a break below the bottom or the top, depending on which way the market's going. So let's just say this is a bullish candlestick. So this would actually be a candlestick that is green or white. So we're falling and we gap lower and we go higher. Now, in our crypto world, it's probably going to be something more like this, but it swallowed this candlestick. So what you want to see at this point is follow through. If we break above the top of the candlestick, then you can make an argument for momentum changing. Where do you want to put your stop loss? Well, Most of the time, it's just on the other side of the candlestick. For a really extremely negative one like that, or positive for that matter, you typically don't want to chase it. What you want to see is some type of other confirmation signal. And I would postulate that you got it here. You know, we pulled back into this, got a nice engulfing candlestick, and we went right back down to the low. So those are all things you can keep in mind. Like I said, there's a little bit more artistry to a market that doesn't close than one that does. It's a much clearer and cleaner signal like on a stock chart, right? And again, you're always going to want to practice good money management. You're going to want to look for support and resistance. So right there, we got support and resistance. This was a somewhat engulfing candlestick. This most certainly engulfed several ones before it. So at this point, it's probably a buy signal. Stop loss goes on the other side of this candlestick. Again, it's not the same way you would see it perhaps in a stock. Let's go ahead and see if I can find one on a stock for you real quick. Go on a day. Yeah, okay. So there's a bearish engulfing candlestick on Apple. You see we gapped a little higher and wiped it out. That's essentially what you're trading, except for you're trading it in a market that doesn't close. So unfortunately, you don't get those easy to spot gaps. In the next video, I'll show you some examples of how I would trade this pattern. Hello, and welcome back to Cryptocurrency Trading, Mastering Scalp Trading Strategies by Wealthy Education. In this video, we'll take a look at some of these bearish engulfing and bullish engulfing candlesticks, try to get a read on how we would have traded them. So volume is important. Volume is not the only thing, but you'll notice that I put it back on the chart. And here recently we've had in the last half an hour or so, we've had an engulfing candlestick followed by another one that engulfed quite a bit. Lots of volume. Could Bitcoin be getting ready to bounce? This is the type of things you want to see. Volume's not the only thing though, but clearly you can see that we are engulfing several candlesticks. Here's one that is just massive with this big move. Now, let me go ahead and add a couple moving averages. Let's make this a little more obvious. Actually, let's make the bigger one red. We'll make this one blue. Okay. So 9 moving average is crossing over right after that. And you can see it offered a nice support all the way up. Massive volume. No real reason to think anything other than buying pressure. You could make an argument for resistance there. So again, if you wait for a break at the top of the candlestick, then you have a nice buying opportunity. You don't necessarily just buy it right there, but you would buy it on a break above there. Stop loss. Now, with this big candlestick, you could put your stop loss there, but I think it would make more sense to put it there underneath the last swing low. Pretty straightforward. And you can see that the market went all the way back up to its recent highs. Okay, let's take a look at Ethereum. Yeah, this is a massive engulfing candlestick, and notice how volume is picking up. So, a couple things you could pay attention to. Number one, this was a low that we took out in the very next candlestick. So that would have given you a reason to short there, moving averages, volume picking up. We can take a look at the MACD. You can see that we started to see the histograms drop drastically after crossing and the initial candlestick. They crossed again right around here. You could have taken profit there, or you could have waited until we really got overstretched. But you can see pretty quickly a nice setup for a bearish engulfing. Now, this is one of those bearish engulfings I said earlier that were so negative, you need to find another signal like later on down the road. You may have gotten it there, but not a whole lot to look at. because the market has moved so far that it's difficult to chase that trade. Here's a very bullish engulfing candlestick. It's actually got a slight gap on it, for that matter. Wiped out a lot of candlesticks ahead of it. So a break above that would be a buying opportunity. If you put your stop loss on the other side of the candle, you never had an issue. Here's one that was really ugly, but then it just kind of went sideways. So why chase it, right? This one was pretty ugly, but never really gave you confirmation and didn't break down below it until all the way over here. Not that you couldn't have taken that signal later, just that it wasn't necessarily the best setup for you. Again, here's a failed one because we just never picked up any momentum. So, like I said, there's a little bit of artistry involved in these, but if you pay attention, you can spot them. Here's one that I think was worthwhile. We got the moving average cross, we got the MACD crossing, wipes out a lot of candlesticks. You saw in a breakdown below there, put a stop up there, and you can see that we went all the way down to the support level pretty quickly. And in fact, it ended up going much further. Again, this is something you need to look on your charts and play around with. They aren't always obvious in the sense that this wasn't that great of a candlestick, mainly because of the ground it covered. That's like a bit too much. You could have gotten in based upon these hammers here, which we'll talk about later. But like this one here, there was no follow through. So if it doesn't have follow through, it really doesn't matter. That being said, be cautious. Make sure you practice money management, not risking more than you can afford to lose. And by all means, please take a look at long amounts of data, even longer term charts to get an idea. As a general rule, we were in an uptrend. This is a lot more interesting to me than this because it's not fighting the trend. That's something to keep in mind as well. In the next video, we'll take a look here and we'll talk about the bullish and the bearish Harami candlesticks. Another one that we kind of have to tinker with a bit for a market that never closes.